You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by rsrhomeselect.com, rsrhomeselect.com. 10 unexpected benefits of a good credit score. Beyond the obvious perks of securing loans and better interest rates, a good credit score can actually open doors to a lot of unexpected benefits. Just like bad credit score can keep them closed. Here are other ways your credit can affect your life. Number one, make you a more competitive renter. Renting in a great city or neighborhood will always be competitive, and unfortunately in 2024, it's more competitive than ever. Having a better credit score than other renters might just give you the extra edge you need. Number two, score lower insurance premiums. Insurance companies take your credit score into account when calculating premiums in some states. Why? Because they believe that responsible financial behavior correlates with responsible driving and fewer claims. Number three, nicer cell phone plans. No one likes feeling nickel and dimed by a cell phone provider. With a good credit score, you might qualify for a better phone plan with lower monthly payments and upgraded devices. Number four, hassle-free business loans. Dreaming of starting your own side hustle or expanding your entrepreneurial empire? A strong credit score can help you secure business loans with better terms and higher limits. Number five, access to exclusive credit card offers. Credit card companies love a good credit score as much as you do. With top-notch credit, you'll receive invitations to exclusive credit cards with juicy rewards, cashback offers, and maybe even access to those fancy airport lounges. Swipe responsibly and the perks keep rolling in. Number eight, negotiating power. Whether you're buying a car, negotiating rent, or closing a deal on your dream home, a good credit score gives you leverage. It shows lenders and sellers that you're a reliable borrower and serious about your financial commitments. Number nine, better job prospects. Certain industries, especially those in finance or positions requiring security deposits or security clearances, may check your credit history as part of the hiring process. A solid credit score demonstrates responsibility and trustworthiness, potentially giving you an edge over other candidates. Number 10, peace of mind. Perhaps the most unexpected benefit of all is the peace of mind that comes with financial stability. A good credit score reflects disciplined financial habits, which can lead to less stress about money and more focus on enjoying life's pleasures. Whether it's a spontaneous weekend getaway or treating yourself to that fancy coffee, good credit makes it easy to savor the moment. 2 tools for you to get that good credit. Remember, rsrccpayment.com. That's one of the tools that will actually show you how to get good credit or to maximize your credit score by paying your credit card bills the right way, rsrccpayment.com. And monitor your credit scores on a regular basis. Yes, you can get a free credit report at annualcreditreport.com. You can get one every week, but it doesn't give you your true FICO scores. Neither does Credit Karma, Credit Sesame, or some of these other places. They give you credit scores, not FICO scores. Cleanall3.com, cleanall3.com. That will give you the true scores that you want. That is the Borrow Smart segment brought to you by rsrhomeselect.com. Want to get your house paid off quicker than any other way? rsrhomeselect.com is the fastest way. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Why a foreclosure wave is not on the horizon. Even though data shows inflation is cooling, a lot of people are still feeling the pinch on their wallets. And those high costs on everything from gas to groceries are fueling unnecessary concerns that more people are going to have trouble making their mortgage payments. But does that mean there's a big wave of foreclosures coming? Here's a look at why the data and the experts say that's not going to happen. There aren't many homeowners who are seriously behind on their mortgages. One of the main reasons there were so many foreclosures during the last housing crash was because relaxed lending standards made it easy for people to take out mortgages, even when they couldn't show they'd be able to pay them back. At that time, lenders weren't being as strict when looking at applicant credit scores, income levels, employment status, and debt-to-income ratio. But since then, lending standards have gotten a whole lot tighter. Lenders became much more diligent when assessing applicants for home loans. And that means we're seeing more qualified buyers who have less of a risk of default on their loans. That's why data from Freddie Mac and Fannie Mae shows the number of homeowners who are seriously behind on their mortgage payments, known in the industry as delinquencies, has been declining for quite some time. If you're watching us on RonSiegelRadio.tv, any of the socials, or the ABC News and Talk AM 1490, FM 98.1 video feed, you're seeing a chart of serious delinquencies, and it is on a decline, which ironically enough, it's on a decline right now. And during the pandemic, it was on a forbearance. They couldn't even do it. What this means is that not only are borrowers more qualified, but they're also finding ways to navigate through their challenges, exploring their repayment options, or maybe even using the record amount of equity they have to sell and avoid foreclosure entirely. The answer is there's no sign of a wave coming. Before there can be a significant rise in foreclosures, the number of people who can't make their mortgage payments would need to rise significantly. But since so many buyers are making their payments today and homeowners have so much equity built up, a wave of foreclosures is not likely. Take it from Bill McBride of Calculated Risk, an expert on the housing market who, after closely following the data and market leading up to the crash, was able to see the foreclosure crisis coming in 2008. McBride says, quote, "We will not see a surge in foreclosures that would significantly impact house prices as happened following the housing bubble for two key reasons. Number one, mortgage lending has been solid. And number two, most homeowners have substantial equity in their homes," unquote. Bottom line, if you're worried about a potential foreclosure crisis, no, there's nothing in the data to suggest that'll happen. Buyers are more qualified now, and that's one reason they're not falling seriously behind on their mortgage payments. That is the Mortgage Minute, brought to you by rsrmoney.com, rsrmoney.com. Reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. And I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Your Credit Matters segment today being brought to you by RSRDebtFree.com. RSRDebtFree.com. How cash-only spending affects your FICO scores. As interest rates rise and more businesses charge a fee for using credit cards, more people are opting to tuck their credit cards away and embrace a cash-only lifestyle. Returning to cash does have some appeal. Many people find that using cash makes it easier to stick to a budget and steer clear of debt. Relying on cash can also save money since it eliminates credit card interest and allows you to avoid credit card convenience fees. However, abandoning credit cards means trading the perks that come with using a credit card. For instance, you miss the opportunity to earn rewards and forego protections like extended warranty coverage and purchase protection. Opting out of credit can impact your FICO scores and progress toward reaching your financial goals. Here are 2 keys that this could impact your FICO score. You may not have a FICO score since cash payments aren't included in your credit report, which holds the information used to calculate your FICO score. Cash-only spending doesn't impact your score. Your credit report needs to at least one account that's been open and active in the past 6 months to generate a FICO score for you. It's possible to experience a loss of scoreability if your credit file becomes stale, meaning your accounts aren't updated for several months. Younger consumers in particular may be impacted by cash-only spending. In a recent FICO survey, 29% of Gen Z answered that they don't have a credit score or don't know if they have one, compared to just 8% of boomers. Without a scoreable credit history, it's challenging to access credit-based products and services since businesses often rely on credit information to approve applications and set pricing. This means you could face roadblocks when you're buying a house or car, renting an apartment, or even purchasing a cell phone on an installment plan. Know that having no FICO score at all is different than having bad credit, which is the result of mishandling credit accounts. Likewise, you don't have a 0 FICO score since scores range from 300 to 850. You simply won't have a score at all. Your FICO score may not be high enough to get approved, even if you have only 1 or 2 accounts listed on your credit report, like a student loan or being an authorized user. Your FICO score might not meet the minimum requirements set by certain lenders. Your FICO score takes into account the types of credit you have, your mix of credit, and it contributes to 10% of your score. Showing that you can manage different types of credit helps increase your FICO score. This means both having credit and installment loans with a history of on-time payments. Sticking to cash can make you a responsible spender, but that doesn't necessarily show that you're a responsible borrower. Because so many life choices involve credit history, finding a responsible balance between cash and credit is important to responsible building credit. That is the Your Credit Matters segment brought to you by rsrdebtfree.com, rsrdebtfree.com. How to remove collections from your credit report. That is Your Credit Matters segment brought to you by rsrdebtfree.com. How to remove for some reason, how to remove collection accounts from your credit report. There it is. Collection accounts are bad for your credit. Does that surprise anybody at all? Yeah, we've talked about that.
Surprise.
These negative marks on your credit report indicate you might not pay your bills on time or ever, which is why lenders don't like to see them. Collection accounts can stay on your credit report for up to 7 years. This makes it harder to get approved for credit during that time. Learning how to remove collections from your credit report can help you clean up your credit history and open better financial doors in the future. I'm going to tell you some of the methodologies here, but I'll tell you at the end the easy way. What are collection accounts? When a lender doesn't receive payments for a line of credit, they may choose to eventually sell that credit to a debt collection agency to get some of their money back. That line of credit will then be reported to the credit reporting bureaus as a collection account for a credit card, personal loan, etc. And the debt collection agency will then try to collect on that debt for themselves. For you, that means that if you have a debt in collections, you may have the collection agencies contacting you to collect on your debt, and your credit score will likely have gone down because of that collections account. How to remove collections from your credit report? Before we get into the nitty-gritty, we need to level with you. Collection accounts are not easy to remove. Before you proceed with an action plan, make sure your expectations are realistic. If a collection account on your credit report is accurate and you pay it off, it will not just disappear. To remove an item completely, you'll have to negotiate with the debt collection agency and ask for a goodwill removal. They will tell you they can't do it. Yes, they can. If you have a lot of inaccurate collection accounts on your report, you might need help from a reputable credit repair agency, Blue Water Credit. Credit repair agencies can help navigate credit bureau territory, and they frequently can help consumers understand how to handle trickier situations. Before you commit to a do-it-yourself approach to collection removal, the following steps may help you clear up your credit profile. Number one, review your credit report and validate the accurate data. Cleanall3.com. Cleanall3.com is the source we recommend for that. Obtain copies of your credit reports from all three credit bureaus, Equifax, Experian, and TransUnion. Each credit bureau has different information about you. Therefore, if you challenge an unsubstantiated collection account on all your credit reports, you'll have to create disputes with each credit bureau. You're entitled to one free credit report per bureau each year. They're doing it every week now. To get your credit reports, head to the annualcreditreport.com. That will not give you your scores. It gives you the report. You'll be able to view all the information on your file at each agency, but you will not see credit scores. To see a quick credit snapshot and your information credit score, go to cleanall3.com, cleanall3.com. Review the items on your credit report to make sure they're accurate. Do you recognize the listed lenders? Does your account information seem accurate? Are the items on your report familiar to you? If you fell behind with payments on an account, when did it happen? With all that information in hand, you'll be ready to make your next move. Dispute inaccuracies. Credit bureaus are not allowed to report inaccurate or incomplete information. Therefore, if any of the information you see on your report is incomplete, inaccurate, or not verifiable, you have the right to challenge the accuracy of that item. When a credit bureau receives a challenge, it has between 30 and 45 days to investigate and confirm or correct the information it holds on file about you. You can dispute inaccuracies online by sending a letter if you choose the online route. Sign up for a free account. I do not recommend this. It is there, but don't do it. If you choose to send a letter, that's the right way to do it. Include the following: a copy of your credit report with the inaccurate information circled, identifying information about the inaccurate account, including the account number, why the information is inaccurate, what you want the credit bureau to do, like remove the information or edit for inaccuracy. Send any backup information that illustrates you're correct in your dispute. Send a copy of a utility bill, a government ID, and your social security number. They already have all that information. They just want to make sure it's coming from you. Number 3, send a pay for delete letter. You can't get accurate information removed from if you can't get accurate information from your report through a dispute. However, you may be able to get a debt collection agency to remove a collection from your report if you agree to pay the debt. Here's how to remove paid collections from your credit report, or at least try to do so. Send a letter to the debt collection agency or ask via phone for this option. If the agency agrees, get the agreement in writing. Pay the debt. Follow up to make sure the debt is removed from your report. Note this is a long shot, as many debt collection agencies won't change accurate information on the credit reports. The agency may have an agreement with the credit bureaus not to do so. But if they don't confirm it, guess what? They have to remove it. Number 4, pay down collection accounts. If you can't get a paid collection account removed from your credit report, it may be a good idea to work on paying it. A collection account that is paid looks less negative on your credit report than an account that's still open. Therefore, this may earn you a bit of goodwill with future creditors. Plus, a paid collection account may have a smaller impact on your credit score than an unpaid. Number 5, ask for goodwill deletions. If you have an excellent credit history, you may be able to get the original creditor or collection agency to remove the derogatory mark as a favor or act of goodwill. You'll generally have to pay the collection account off first, though if you haven't already done so. If you have an otherwise blemish-free credit history, go ahead and ask the financial institution for goodwill deletion. Removal after payment might be against their rules, but goodwill deletions might not be. And it never hurts to ask. Don't be afraid to wait and check back. Waiting might not be an instant fix, but it's usually a successful tactic. If you need some help on this, our friend Chris Corrales does this all the time for listeners of Ron Siegel Radio. All you have to do is give me a call at 800-306-1990. We'll put you in touch with Chris, and you can actually get that done for you. Your Credit Matters, brought to you by rsrdebtfree.com, rsrdebtfree.com. Reach me anytime, off air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams, or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. and you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
We're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Let's see. Should you rent out or sell your house? That is the subject of our report. Figuring out what to do with your house when you're ready to move can be a big decision. Should you sell it and use the money for your next adventure, or keep it as a rental to build long-term wealth? It's a question many homeowners face, and the answer isn't always straightforward. Whether you're curious about the potential income from renting or worried about the responsibilities of being a landlord, there's a lot to consider. Let's walk through some key questions to help you make the best decision for your situation. Is your house a good fit for renting? Even if you're interested in becoming a landlord, your current house might not be ideal for renting. Maybe you're moving far away, so keeping up with the ongoing maintenance would be a hassle. The neighborhood isn't great for rentals, or the house needs significant repairs before you could rent it out. If any of this sounds like it might apply, selling might be your best option. Are you ready for the realities of being a landlord? Managing a rental property isn't just about collecting rent checks. It's a time-consuming and sometimes challenging job. For example, you may get calls from tenants at all hours of the day with maintenance requests, or you may find a tenant causes damage you have to repair before the next lease starts. You may even have to deal with people falling behind on payments or breaking their lease early. Investopedia highlights, quote, "It isn't difficult to find horror stories of landlords troubled with more headaches than profits. Before deciding to rent, consider talking to other landlords and doing a detailed cost analysis. You might find that selling your home is a better financial decision and less stressful," unquote. Do you have a good understanding of what it costs? If you're thinking about renting out your home primarily to generate extra income, remember there are additional costs you want to plan for. As an article from Bankrate explains, quote, let's go on, mortgage and property taxes. You still need to pay these expenses, even if the rent doesn't cover all of it. Landlord insurance costs about 25% more than regular home insurance, and it's because it's necessary to cover damages and injuries. Maintenance and repairs. Plan to spend at least 1% of the home value annually, more if the home is older. Finding a tenant. This involves advertising costs and potentially paying for background checks. Vacancies. If the property sits empty between tenants, you'll lose rental income. Management and HOA fees. A property manager can ease the burden, but typically charges about 10% of the rent. HOA fees are an additional cost too, if applicable. Bottom line, to sum it all up, selling or renting out your home is a personal decision that depends on your circumstances. Whether you decide, taking the time to evaluate your options will help you make the best choice for your future. Make sure to weigh the pros and cons carefully and consult with professionals so you feel supported and informed as you make your decision. That's what we're here for. Give us a call at 800-306-1990, 800-306-1990. That is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. Just remember, if you're thinking about renting, the big key on that is maybe you just want to hire a property manager. Now, maybe the first one is, what are you looking to accomplish is the first thing you need to understand. Are you looking for income from the rent? Well, that's one issue. Maybe you'll get it. Maybe you won't. It depends. I don't know the basis you have in your property. But a lot of the other issues can be overcome simply by hiring a property manager. And we've talked to some property managers on Ron Siegel Radio before, and they do a lot of different things. They come in all different shapes and sizes. But the bottom line is you're basically just collecting the money or getting the money. You don't even collect it. They collect it for you and deposit it into your account. They do an ACH transfer, a Zelle transfer, whatever they're using. But the bottom line is that they do all the work. They advertise it. They check the credit for the tenants to make sure you're getting somebody good. The calls come into them. Is it worth it? Hard to say. But if you don't know how to do those things, I'm a believer that it probably is. Why? Well, for the most part, a good property manager has a relationship with all the different individuals that are needed for maintaining a property. So they've got a relationship with plumbers, electricians, and gardeners, and you name it, they've got the relationships. HVAC people, furnaces, all that. They've got those relationships. They have a larger purchasing power than you do. So if they've got the relationship, they've got the purchasing power, who do you think is going to get the better pricing? They probably will. Will it offset the cost of their property management fee? Well, you hope not, but it could. Why do I say you hope not? Well, if there's a lot of repairs, well, then it probably will. And you hope you don't have a lot of repairs, so you hope you don't save the money on that. Just throwing that out there for you. Again, if you're interested in this, we're happy to have that discussion with you and see what makes sense for you. Your Credit Matters segment brought to you by rsrdebtfree.com, rsrdebtfree.com. What is a prime credit score? Let's talk about a guide for consumers. Prime credit score typically refers to high credit score, usually above 720. It shows lenders that you have a history of responsibly managing credit and can qualify you for better loan terms and lower interest rates. Few numbers are as important as your credit scores. Lenders use them to determine if you qualify for auto loans, home loans, credit cards, and other products. In some states, insurance companies use credit scores to calculate your premiums. Some states. You may even have to undergo a credit check to qualify for some jobs. And if they can't do that, there's other ways they find that out. Whether you just got your first credit card or have more than a decade of experience managing credit, it's important to understand the score ranges and how they're used. Keep reading or keep listening to learn more about prime credit scores in particular. What is a prime credit score? A prime credit score is any score that falls into the prime category. And according to Consumer Financial Protection Bureau, prime credit scores range from 660 to 719. Some lenders may have slightly different ideas of what is classified as prime, although a prime score is not the highest credit score you can have. Credit scores generally range from 300 to 850. It's high enough to help you qualify for many loans and credit cards. Additional score categories, let's look at that. Prime is just one of the 5 categories used to classify consumer credit scores in the context of lending. The others are deep subprime, near prime, and super prime. Here's what they mean. Deep subprime, 579 or below. If you have a deep subprime score, banks view you as highly likely to default on your financial obligations. In other words, there's a good chance you won't repay loans and credit cards as agreed. With scores in the subprime category, you'll find it difficult to qualify for credit. Even if you do qualify, you'll pay the highest interest rates, making it more expensive to borrow money. Subprime, 580 to 619. Subprime scores are a little better than deep subprime scores, but you'll still find it tough to qualify for loans and credit cards. People with subprime scores also pay higher interest rates than people with scores in the prime and the super prime categories. Near prime, 620 to 659. If you have a near prime score, you're getting closer to qualifying for the lowest interest rates. With a little effort, you can make the leap near prime to prime, making it easier to reach your financial goals. Super prime, 720 plus. If you have a score 720 or higher, you pose the lowest amount of risk to lenders. As a result, super prime borrowers qualify for the most favorable interest rates and loan terms. Note, these score ranges are slightly different from the official FICO score ranges. FICO says 579 or less is poor, 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good, and exceptional is over 800. So just remember, those are all numbers FICO uses. Lending 740 and above. Maybe some you'll use 750 will get you to the best scores out there. Good under 580 is very, very difficult to get a loan. Are there some out there? Probably, but again, you're going to pay for it by a lot. Factors used to calculate your credit scores: payment history. This is 35% of your credit score. This is how you pay your bills. Are you paying them on time? What do you look like historically? If you borrow money, the lender expects to be repaid as agreed. A history of on-time payments shows that you follow through on your financial commitments. Amount owed. That's what we talk about all the time. RSRCCpayment.com. RSRCCpayment.com. Accounting for 30% of your credit score is the amount of available credit you're using on a regular basis. To maintain a prime credit score or super prime credit score, avoid using a high percentage of your available credit. Maxing out your credit cards affects your utilization, which is a comparison of how much credit you have available versus how much you're using. For example, if you have balances totaling $5,000 against credit limits of $10,000, you have a 50% utilization rate. Lenders like you to stay below 30. Remember, RSRCCpayment.com, we show you exactly how to pay those credit cards to maximize those scores. Length of credit history, this accounts for 15%. That's why when you get new credit cards, sometimes you'll see your credit scores drop. One, because of the length of history drops, and the other part of it is because you've got an inquiry. Credit mix. The term credit mix refers to how many types of credit accounts you have. Some people have one or two credit cards, while others have a full portfolio of credit cards, loans, auto loans, maybe a mortgage. This accounts for 10%. New credit inquiries, 10% of your scores as well. Some of the benefits of having a good credit. Having a prime credit score opens many doors for borrowers. For example, you're likely to qualify for the best interest rates, reducing the low cost of borrowing money. Lenders may also be willing to offer more favorable loan terms, such as more time to pay or reduced fees. Good credit also gives you more freedom. If your car breaks down, a prime credit score makes it easier to qualify for a vehicle loan. Without a good score, you might have to rely on an unsafe vehicle or take out a loan with an extremely high interest rate. Prime credit scores may even help you secure lower rates on your auto insurance, homeowners insurance, or renters insurance coverage. Once you have a prime credit score, it's important to maintain it. You can maintain good scores by making on-time payments, keeping your credit utilization rate as low as possible, and applying for credit only when you truly need it. Over time, these good financial habits may help you jump from lower credit to higher credit. Want to get your credit scores? Want to get your credit report? Cleanall3.com, cleanall3.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Reach me anytime. Off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by, I don't know, rsrhomeselect.com, rsrhomeselect.com. Why am I passionate about the reverse mortgage? Simple. My mom and dad. Well, that 15 years ago, maybe more, my mom and dad got into a reverse. We helped them get into a reverse mortgage. Great, great tool. They lived with it for many, many years. And when my dad passed, my mom didn't have to make any mortgage payments. Mom passed. I was a successor trustee or co-successor trustee. So I understand the program. I understand what it's all about. I understand how to liquidate it, how to live with it, how to enjoy it, the benefits. I also understand the myths. And these are big because so many people have a misconception about the reverse mortgage. Myth number one, the lender owns the home. No, they do not. You own your own home. Doesn't change. It's a lien, just like any other lien on any other piece of property. This is just a lien. Myth number two, the borrower is restricted on how to use the loan proceeds. No. Use them for whatever you want to use them for. Myth number three, it's only for poor people. No, again. I find a lot of people are using it for strategic planning. So yes, it can help seniors that are having some financial challenges. Not saying that doesn't do it, but there are others that, they're in totally good shape, but they have other desires. We helped my friend, the late Jay Kaplan, helped somebody. $25 million home, free and clear. Didn't owe anything on it. He got a $4 million reverse. It was not the FHA reverse. It was a jumbo product, but he got a $4 million reverse and was able to give each of his sons $2 million toward the purchase of a new home. They were going to get the money anyway. Didn't change his lifestyle, the father's lifestyle in any way, but he got to watch his sons and their families enjoy the new homes. They were going to get it. So now he gets to have some enjoyment. These are just things that happen. Had another one. A lady has a $10 million home, give or take, and was able to do a $4 million reverse. Gave each of her kids $1 million, or each of her kids $1 million and put $1 million in the bank. Think about those concepts. Now, those were not needs. Those were wants. Wanting to see that happen. So it's not only for poor people. Number four, once loan proceeds are received, you pay taxes on them. Taxes are called income taxes. This is a loan. There are not taxes on the loan. Again, I don't give tax advice. You've got to go to your tax professional for that. But these are loan proceeds, not taxable. Number five, the home must be free and clear of any existing mortgages. No. If you've got the equity in the property, you pay off the existing lien and you get the reverse mortgage. Go on your merry way. If you have extra money there, fine. So it does not have to be free and clear. And as I mentioned in the last segment, you can even use the reverse mortgage to buy a new house. So what is a home equity conversion mortgage? That's the fancy name. That's the FHA name for a reverse mortgage. Because the reverse mortgage years ago had that bad connotation that they were going to take your home. That was in 1985 that stopped. So a home equity conversion mortgage, a loan allowing 62-year-olds or older in age to stay where you are, basically, or buy a new house. It gets access to equity. The borrower receives the proceeds in a lump sum, line of credit, monthly payments, or a combination. It's FHA insured. It is a non-recourse loan. What does that mean? Your estate will never owe more than what is owed. So they don't have to come out of pocket once you pass or leave the property. It's non-recourse. Repayment is deferred. No monthly payments are required, but you can. And sometimes there are tax advantages to doing it that way. Yes, you can buy a home with a reverse mortgage. So if you're selling a property or you get a large lump sum of money somewhere, whatever, and you go and make a down payment, generally you're going to be in the 40 to 50% range depending upon your age. So yes, you can use it for a purchase. Again, the amount you get is based on your age and the interest rate. So as interest rates are higher, the amount you get is lower because of the way that works. Home equity can be a flexible way to solve many retirement challenges. Create additional sources of non-taxable monthly income. Eliminate monthly mortgage payments to boost cash flow. Provide alternative to drawing down retirement savings and qualified plans. Purchase a new home. It gives you flexibility. You may be able to wait. When the markets are good, that's when you want to take money out of the market. When the markets are bad, no, you don't want to take money out of the market when it's bad. You can use money from other sources. This might be that other source. What happens when the loan ends? 3 options when the loan becomes due and payable. That means the last borrower sells or permanently moves out of the house, passes away, or fails to meet the terms of the loan. What are the terms of the loan? We got to pay your taxes. You got to keep insurance, and you must maintain it in a safe manner. So all of those are the terms of the loan. 3 options: repay the loan and keep the house. You might do a refinance, whatever. Might be insurance proceeds or maybe other proceeds that your heirs or your trust. Oh, no, by the way, yes, you must have a trust. It's not a requirement, but you should. I digress. Sell the house, repay the loan, and keep the remaining equity. So you've got a house that's worth $800,000. You've got a loan that's worth $400,000 or due. Sell it, and the difference, $400,000 less expenses, is what goes into the estate or to the person leaving the property. If it's the senior can sell the property anytime they want to. If they, for any reason, moving out of state, want a different property, like a different community, want to get closer to the kids, whatever it is. If the loan balance exceeds the home's value, you deed the home to the lender. No repayment beyond the home's value is required. Although if the heirs want to keep it, they can keep it. They just pay 95% of the appraised value to settle the loan. Pretty simple. Reverse mortgage has evolved over time. It's no longer the last resort. It's not merely for people with financial distress. More financial planners are recommending as a retirement strategy. If you're a financial planner, you should be talking to your clients about this because it might give you an opportunity to help them, as I mentioned earlier, with increasing their lifestyle, because they're taking some of the equity as they sell their property or move to another property or take a reverse mortgage. They're not having to pull cash out to make a mortgage payment, or maybe they're taking cash out and they're putting it into CDs or treasuries or things like that so they can take money over time and enjoy their golden years. Once you get to that age, my personal opinion, it's all about cash flow. It's all about cash flow. You're not building wealth anymore at this stage of life. You're about cash flow. How much cash flow do you have? What do you need? How do you enjoy the golden years? Options and flexibility have made a reverse a powerful financial product, and love the reverse mortgage. So we keep on. Whoops, where it is. Who is good for a reverse mortgage? It's if you're over 62 years of age. There are some that go younger, but for the most part, over 62 years, 50% or greater equity in the home and resides in the property. It is not a loan for investment properties or second homes. You got to be in the property. It's got to be your primary residence. How do you qualify as a primary residence? Technically, you're there 183 days a year. That's the basis, over half the time. Smart reverse strategies. Eliminate monthly payments by refinancing out of a standard mortgage. That's what my parents did. They had a mortgage. We had pulled money out of it over and over again strategically. They had that invested strategically. They did not need the cash. But in the golden years, why did they need, I think it was a $3,400 mortgage payment? They didn't. So we changed out of it. Increased liquid cash flow. Well, they didn't have to pull that $3,400 out of their savings or the retirement funds on a regular basis. Love that idea. Bridge the Medicare gap from age 62 to 65. Well, now you've got some extra funds to be able to pay for insurance if you were retired. I like this one. Well, it didn't happen for me, but inheritance advance. I told you those two stories earlier about the folks, one with a $25 million property, one with a $10 million property. Their kids were going to get the money anyway. It just advanced it. So the senior got to see them enjoy it, got to enjoy the gift of giving instead of them getting it after, they passed. How about the 401k and the IRA extension? You get to strategically take the money. You're not taking the money when you have to. You're taking the money when you want to, when it's strategic for you. What's the process like? Well, it all starts with a consultation with a counselor consulting with the borrower. Actually, we talk to you first, then you go to a counselor and application complete. What does that mean? Well, you're going to have to go and have counseling. Generally, right now, it's done online. So there's counselors all over. We give you a list of about 10 different counselors to use. Then on the back end, the team will pull a case number and order for the appraisal and whatever services or needs. Files submitted to underwriting just like any other. Conditions are issued, clear to close, and you get the money. But requirements: live in the home permanently, stay current on property taxes and assessments and insurance, keep the homeowner's insurance policy in place, and maintain the home. It's got to be safe. We're not looking for anything like that. Remember, the homeowner keeps full title, ownership, and control of the home. That never changes. Qualifications: all borrowers must be at least 62 years of age, must have sufficient equity, pass the financial assessment. Not too hard. If you don't pass the assessment, then you might have to go with a set aside for taxes and insurance. Must be the primary residence, no second homes or vacation homes. All borrowers must attend the counseling. We talked about that. 4 nevers. The homeowner and his estate never give up title to the home. Number 2, the homeowner, when leaving the house or his estate, can never owe more than the home's values. Conversely, when the home is sold, sale proceeds in excess of the debt amount belong to the borrower's estate. Number 3, even if all the money that can be borrowed through the reverse mortgage has reached its limit, the borrower never has to move, provided the taxes, insurance, and home maintenance are continued. Number 4, monthly repayments are never required or expected, although voluntary payments are accepted. So you can do that. Eligible property types: single-family residence, modular homes, 2 to 4 family residence where the borrowers occupy one of the units, townhomes, planned unit developments, PUDs, condominiums, if they're approved, site condominium. All of those things are good to go with it. Got to make sure your state and local taxes are current, or they have to be made current. We look at that also. Talked about the living in the property. There are some alternatives. If the home equity conversion mortgage, the FHA product, isn't the right one for you, there are seconds that are available. There are jumbos that are available that'll go up to a higher loan limit. And as we've talked about many, many times, the Home Select loan may be the right one for you as well. So we look at all of those options to find out what is the suitable product for you. That's the Borrow Smart segment, talking about reverse mortgages, brought to you by rsrhomeselect.com, rsrhomeselect.com. Also, want more information, ask about reversemortgages.com, askaboutreversemortgages.com. As always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
And I can be saved. The tides that I tried to swim against.